Good morning. This is Robert Kaars Sijpesteijn bringing you this morning's market update. Taking a look at last week's close in the US, indices ended the week up, continuing their rally. The US 500 closed Friday up 4 points and ending the week on 2,033.78. The US Tech 100 ended the week on 4,448.18 after gaining 18 points on Friday, and the Wall Street added 25 points to close on 17,213. This week sees Ferrari's IPO take place on the New York Stock Exchange. However, there is a strong belief that the initial public offering is oversubscribed throughout its price range as investors' interest in the supercar maker outstrips the shares available. The share sale, which has been in the works for about a year, is critical to help Fiat Chrysler finance a €48 billion investment program focused on expanding the Jeep, Alfa Romeo and Maserati nameplates globally. Chairman Sergio Marchionne, also Chief Executive Officer of parent Fiat Chrysler Automobiles NV, has taken both companies' stories on the road in London, New York and Ferrari's home in Maranello. Finally, pricing is expected late Tuesday, with trading due to start on Wednesday. Fiat Chrysler is keeping the share volume in the IPO limited to ensure robust demand, just as Ferrari boosts its own product allure by capping the number of cars it makes. After the share sale, Fiat Chrysler then plans to distribute its remaining 80% Ferrari holding to its own investors early next year. Looking into commodities, gold dropped on Friday, losing $3.80 to close on $1,177, and Brent crude has remained under $50 after slipping below the mark last Monday and closed the week down at $47.27 a barrel. The glut seems to continue, with two of the biggest independent oil explorers in the North Sea predicting a further 10,000 jobs will be lost from the sector, indicating a growing acceptance that oil prices are stuck in a prolonged slump. Since last year, 5,500 people directly employed in the industry have lost their jobs, 15% of the total workforce, due to the fall in the price of oil. According to Oil and Gas UK, a trade body for the offshore sector, this statement was released. The UK's North Sea is the most expansive place in the world to extract oil, thanks to high staff costs and declining reserves, which means companies have to spend more to reach what is left. Those extra costs have left it more exposed than most regions of the tumbling oil price, which has fallen from $115 last June to around $50 currently. Some industry executives had admitted they were slow to reduce jobs and costs in the first few months of the oil price collapse. Mr. Pizzeo said, "We went through last year's cycle in a little bit of a timid manner. There was a feeling that maybe things can come back like they did in 2008, 2009, but that clearly hasn't happened." In Europe, the Germany 30 finished the week above 10,000 after dipping below midweek. The index lost 43 points on Friday, however closed on 10,132.9. The UK 100 remained relatively flat on Friday, dropping all of 4 points to close on 6,394.5. This week is set for the latest public finance figures released on Wednesday and are expected to have seen renewed year-on-year improvement in September after a particularly disappointing August. In the corporate calendar, tomorrow sees figures released from Whitbread and ASOS, with Sky and Home Retail Group to report on Wednesday. Easing concerns in China, figures released show that China's economy expanded quicker than economists' forecasts in the third quarter as the service sector propped up the world's second largest economy, suggesting monetary and fiscal stimulus is keeping Premier Li Keqiang's 2015 expansion target within reach. A stronger services sector and robust consumption are helping offset weakness in manufacturing and exports. The government has cut interest rates 5 times since November and boosted infrastructure spending in recent months to keep growth from sliding too far below this year's target of about 7%. In today's corporate news, Carillion has signed a contract with Homes and Communities Agency for £80 million to regenerate the tower work in Holbeck Urban Village on Leeds South Bank. ITV has confirmed the £100 million takeover of Belfast-based UTV Media's television channels. The UK's most famous toy store, Hamleys, is poised to be sold to a relative of House of Fraser's Chinese billionaire owner. And Street Hub, a network of independent retailers has announced a $2.6 million funding round led by Octopus Ventures. That's all for this morning's market update. Thank you and goodbye.